For EU, it's looking like it's gonna push down a bit more. So I'm seeing this pattern, which is a descending channel, and then this impulse to the downside. Nice big push, nice momentum. Again, news candle definitely just by the size of this huge wick on this 1 hour chart. What I'm looking for is I'm looking for this to continue down a bit more, and then I would be looking to sell right here. Or possibly give me a break and retest entry, but I need a nice break of the low. So I'm looking to sell EU. And then EJ, let's take a look at that one. EJ has been descending in a larger channel. So I am expecting it to push up actually, but I still need to see evidence. So I need to see a large push to the upside, which would look something like this. And then I would be looking to buy. So a bit more patient on EJ. It can still continue descending for a long time, so still continue showing this sort of a pattern. Aussie US dollar, well, nothing much. I mean, I'm seeing this push right here, but overall it's kind of stuck in this general price action. So I think I would need to wait for a bit more momentum going to the downside to be interested in any sells. AJ, similar to EJ, we had a descending channel, but it actually did break out with this push up. Now it retraced, so I'm seeing if potentially it will continue up, and then for me to buy. So this one is currently on my watch list as well. And then we have the pound. Pound, kind of a similar story to the Aussie US dollar. Again, kind of flat right here, and then this push is not that big, especially on the pound. I want to see more momentum. So I want to see a large push on the pound. And then we come to NJ, which is just very, very flat, very, very range bound, and definitely not on the watch list. So I'm looking to sell EU. EJ, I'm looking to see a push up. AU, maybe a push down. AJ, push up. Pound is too flat, and NJ is too flat as well. So some potential, but not the best. I have had better days.
Okay, fair enough. Yeah, I know some days, Marco, you jump on here and you've got like 3 charts that you're like, well, I'm about to trade. And then other days, you know, same with everybody, right? Everybody has those days where they have a lot of setups. And sometimes what I find is a lot of times I have a lot of setups, but they're not at entry points. And so it ends up being a lot of waiting. I feel like maybe that's relatable. Miko, what do you watch on any? I have to ask you about pound USD off the 4 hour chart. What do you think about that setup? I'm looking at it a little bit myself, but I want to get your thoughts.
So yeah, with pound USD, I have been particularly bullish on the pair, but we've come to some prices where I'm starting to back away, as in it's not looking attractive to buy anymore. Not necessarily looking to sell yet. There's some other dollar pairs that look interesting for me. Pound USD is not necessarily on my watch list at the moment, but when we're coming to some areas, particularly 1.26, 1.27, where we see a lot of friction around here, a lot of rejection, and I'm wondering maybe if this bullish trend is going to have a breather or is it going to reverse? I'm not quite decided yet. I'm not really looking to pick anything with pound USD. All I can see is that we're in an area where we might start to move sideways a little bit, maybe have a bigger retracement, or maybe reverse even. So I'm kind of waiting to see how things develop. The bullish trend as well, we had some really nice pullbacks, but you can see you kind of be losing steam a little bit with these bullish pullbacks, and now we're starting to gain some bearish momentum. So I wonder, is it time for us to reverse? But I'm not.
Did you know our market scanning software, the Edge Finder, just got even better? Check out our newest asset, Bitcoin. That's right, Bitcoin was our most requested feature update, and we're so excited to announce Bitcoin is finally here with plans to add even more crypto in the future. We've also updated our most popular feature, the Smart Money Tracker, adding even more data than before. The Edge Finder not only automatically scores 8 different metrics for each asset to give it an overall buy, sell, or neutral score, but it also keeps track of bank and analyst positioning, stores historical fundamental data, shows how assets are trending throughout the day, and so much more. Right now, our YouTube viewers can get the Edge Finder at a discounted price when they use promo code A1YT. You can check out the Edge Finder with the link down in the description below, and again, get it for the special discounted price when you use promo code A1YT at checkout.
I'm not confident with any setup at the moment. But with Aussie dollar, I really like this one to the downside. I'm starting to potentially shift my bias from bearish dollar to bullish dollar, but not quite just yet. In terms of Aussie dollar, I do like the shorts for this one. We're coming to a very attractive area of confluence where possibly we could be seeing the next lower high. We've got one over there, second, third, could be seeing another one form in the daily chart for a big move to the downside. This one's been bearish for quite a while. Bigger picture, been heading lower as well. So I'm waiting for some shorts here on the Aussie dollar, and hopefully we can find some sell setups probably for next week. I'm not too sure if anything this week, but I do like this one heading to the downside. So yeah, I might be changing my bias on dollar, not fixed yet though.
Okay, fair enough. And I think the dollar, there is an argument where if you do start to see some breakouts, some change in momentum, if nothing else for the short term, I've got my 4-hour chart here. You've got very slight, oversold kind of breakout potential here, where you do have this downward trend, price breaking out here, could be due to maybe retest the top of this channel. Not necessarily a trade that I love personally, but at the end of the day, there's possibly some room for this thing to pull back. It's definitely sold quite heavily for some time, and even in these moves, especially if you could spot them pretty quickly, the reversals can be pretty good. I would say personally, for me on the dollar index, a real potential bullish signal would be like a break over 104. 104 was like this big level of support here. It came back and retested at resistance here. So to me, what would be a potentially like bullish signal in the short term for the dollar from a price action standpoint would be a break of that 104 level. So I think it is worth mentioning and worth watching the dollar index here. I think one thing also to note, even though you guys are primarily on the technical side, you do also make note of news events and major catalysts that could cause stirs in the market, because at the end of the day, a big news event can cause some wonderful technical moves as well. Right now, a little bit of a struggle is that in December, we don't have a ton of market shaping news. Now we do have like your NFPs and things like that, but no major really live Fed meetings or things like that, which by the way was really what kicked off this entire downward trend. That was the day that we had FOMC and Jerome Powell sounded really a different tone than what he had on the dollar, so or on the inflation story. So really interesting to see how that plays out for the remainder of this year. And I also want to ask, Marco, do you take off? And I think maybe a lot of people in the audience are wondering this as well. Do you stop trading at any point in December? And at what point, if you do?
So December, I have found from the backtesting that like after Christmas, usually it's very flat, especially on the 1-hour chart. So after Christmas or somewhere in the beginning of Christmas, you get something like this, right? It's super flat. For me as a trend trader, it's not very good. The volatility is not high and the liquidity is not high either. But for range-bound traders, it might be exactly what they are looking for. So I'm not stopping trading, but I am being a lot more patient, and I'm looking for those really high probability setups. I'm looking for really strong trends. But up until I would say Christmas, I'm definitely being active and trading as usual. What I found, certain pairs work better in December. For example, Euro and US dollar tends to have some nice Decembers, while let's say Aussie US dollar or the pound US dollar usually have losing trades in Decembers in the, let's say, last 10 years. So I know which pairs to focus on and I know which pairs to keep my eye on. So I just readjust the plan, but I continue trading, continue watching the charts, forecasting, same story.
Yeah, that's awesome. And I like the way you answer. Usually, Marco, when I ask you like a question like that, what I love is that you usually lead your response with what you've actually found in your testing. And I think that that's a really important point for not just our discussion, but for people who are listening. Notice that, when you ask people like Miko, Marco, like, what do you think about this? it's not like a gut call. It's not like a, like, oh, the market always does this. No, it's like actually employing some level of game plan to it. Like, oh, I've tested this and I know that these pairs do this, and the market tends to do this at this point. Like, that's what real trading is. People love to kind of they love to kind of trade on like trust me bro logic, a lot of times. So you can't be out here saying trust me bro about making huge financial decisions as a trader. If you're going to do this for long term, you got to have responses like Marco and Miko. Miko, so same question. What do you think about trading in December? I know you're more on the 4-hour swing trading side, day chart. I'll throw my answer in there with it too. As a swing trader, I typically take less trades, and usually ends up being that if I'm in good trades, I hold them through the period and just kind of let things run. But I don't look to take a bunch of trades after like December 20th or something like that. But what about you? What do you think?
Yeah, I mean, I'm pretty similar as well. I mean, coming into December, I just tackle it as same as I do with every single month. Haven't really noticed any major differences in my trades in December. However, there is that one last week of December between Christmas and New Year's, which I probably will not trade and take off, because normally the market is quite dead during that last week of December. So the first 3 weeks to like the 22nd or something like that, I'll be trading, but that last week I will not trade, and then I'll come back 1st of January, because coming to the new year, the markets are moving pretty well from my experience. The 1st of January till the whole of January is looking very a lot of volume. So that's where I kind of focus. But that last week I'll take off.
Yeah, they call it the January effect for a reason. January, a lot of big money has to kind of reposition towards the end of the year and then enter back into or create new positions in the beginning of the year, especially on like the hedge fund side, for example. They might be closing out. Tax loss harvesting is a big thing towards the end of the year in the United States. I know for a lot of funds, I'm not actually sure how that works in other countries, but the point is they sell a lot of big positions or losing positions actually. And what's a noticeable trend right now is that the winners of the year on the stock indices side have been the NASDAQ, and the losers, for example, might have been like the Russell or the Dow Jones. And what's interesting is that kind of recently during this tax loss harvesting period, we've seen the NASDAQ do better, even though it's already been the better one. Like, the winners continue to win and the losers are getting sold for tax loss harvesting. Some arguments could be made for maybe in January, there's a little bit of a run for some of the other sides of the indices. But that is, of course, the indices side of things. We could go into a rabbit hole with that. Are you looking at indices still? And if so, what's your reaction to what's been going on?
So it's hard to say, because on a technical chart, things don't look very bullish. Kind of looks like consolidated. There's a lot of just big swings either way, but yesterday we caught a huge swing to the upside. I took a trade on the S&P and it went pretty well in my favor, but it only came all the way back to where I was forced to just manually close. So I would like take some profit, but today kind of looks like the same. I don't really think that there's necessarily going to be a big bullish move today, but PCE numbers came in lower than last month, and that's a good sign for the stock market. And GDP numbers were also good. So just seeing the blend of good economic data and lower inflation, PCE kind of confirms or reinforces the idea that CPI is, continuing to fall. And I heard that this Thanksgiving was one of the cheaper Thanksgivings in a while, because, inflation had come down so much. So price of many things, like the average Thanksgiving food was was a lot lower. So cheaper prices is good.
Yeah.
And it's a good sign for the fundamentals in a market at least. But it looks a bit overextended as it has been for several days now. I think this is probably candle 8 of just hovering in the same spot over and over. And these two candles right here are not they're not promising, and it looks like there will be a pullback, but fundamentally things look good. I think we just may have to wait for the price to sort of figure itself out and come to a decision at some point. So yeah, I think in the meantime we're going to see either some consolidation or downside in the market, but a lot can happen. We have Powell speaking Friday, so not really looking at anything right now on the indices after my trade yesterday, but I'm still, I stopped out of EU as well. I was long euro dollar, and that came all the way back. So I think I'm just going to be waiting on gold, stocks, currency pairs like EU and GU before I start making a decision again. But yeah, the way this looks right now is some buyer exhaustion. We're looking at a slower rate of gains, and at the same time, prices just coming all the way back down to break even and just staying in this zone. So I am not going to look for any longs anytime soon, I would say.
That's fair. I agree. I mean, I don't necessarily think that, I don't see a catalyst just yet for a drop. However, this extension has been going for some time. We've had a huge run up on the indices side of things, and I think that it's probably due for, if not a pullback, right? A pullback by consolidation is also probably appropriate. Like even if it just goes sideways for a little while, some time to digest all of this gain makes sense. And I don't necessarily think it drops big from here unless something drastically changes, because all of the stuff that happened fundamentally to get us to this point, I think was valid. I think this rally was much needed in terms of earnings held in there. You see yields coming down, which was a big headwind for markets. They're up a little bit today, but overall they've been trending lower. That's been a nice bullish catalyst to the market. And by the way, for the dollar traders out there, always keep an eye. Frank and I pointed out often, but yields are really important because, of course, yields are in some ways reflective of monetary policy outlook, et cetera. So yields coming down, that's been a nice, tailwind to the stock market and to the indices. And by the way, also gold, right? Inflation cooling has been a nice positive thing for gold. You mentioned gold earlier, Frank. For me, I'm watching it for a possible pullback. I like the 61.8. So if we get a retest to like 2013, I think that might actually be a bargain. And that's weird because you might have said over here, right? So this is like another example, as we were talking about pullback by consolidation. Gold kind of went sideways for a little bit and then exploded again with more dollar weakness. So it's almost like, yes, it can look overextended, but if it consolidates and then breaks out again, momentum is a real thing in markets where, this thing might look overbought, but it can go higher. And so I think it's still appropriate to wait for a pullback on gold, but I'm very interested in seeing if I can catch that pullback around the 61.8. So that's on my watch list. I think you mentioned gold. Where would you take gold or be considering gold trades?
You said 61.8, but that's about the same level just because of that structure right there. So somewhere in that zone, I'm looking at like, I think it's the 2010s level. When you mentioned yields, so I pulled up that chart. I just wanted to point out,
Gotcha.
Yeah, so the trend was overall up for this for quite a while, and then we saw a break underneath, structure like the trend line, lower highs, lower lows, and something I haven't really been mentioning yields a lot lately, but seeing this sharp decline, we're now at 4.6%. And earlier this month, we were touching above 5. So this is a pretty steep decline. I think that, we have overextended and, overbought, oversold levels on some things. So I think the pullback is really just somewhat of profit taking. There really isn't anything suggesting that the market is not strong and the economy is not doing well despite higher interest rates. And inflation is coming down. It's the same thing we've been talking about for a while now, but things run really hot and then they have to pull back and set up for another trade. So this could keep going higher. The rates could keep going higher, but overall it's touching lower lows. It's 4.6%, which it hasn't been at in a long time. So I think this is a good sign. And if we can see the 2-year dip below the 10-year, that would be a really good sign too. But I think the 10 years at like 4.3. So,
yeah, 10 years been really, the yield has really, really dropped on that one, which again, I think is in some ways, people going out more on the duration of yields or bonds is in some ways kind of good, because it's like, people are a little bit more confident about the situation if they're going to buy a 10-year instead of buying a 2-year and just kind of parking money there. So to your point, there's 4.35% on the 10-year here today, and spiking a little bit, but this might be, again, the one to watch is the US 10-year or US 2-year, as Frank was looking at, for the dollar index, if you're somebody trading currencies or even watching for indices. And I will say this has a really big impact on more interest rate exposed assets like the Russell, as we've talked about heavily. It also has a big impact on gold prices as well for the gold traders out there. So if this continues to spike, I actually think that, in some ways, Frank, that a bigger move up here could actually get us those entries on gold, right? So by proxy, the yields rising a little bit here today could give us an opportunity to essentially bet against yields going higher and potentially get long gold. So will be an interesting trade to watch out for sure.
Don't forget to check out the links in the description if you want our broker recommendation, access to our free Discord, free Edge Finder, or want to chat with us on Telegram. Remember, you can watch us live in the markets every morning starting at 9:30 a.m. Eastern Time, and we have lots more free trading tools and content available on our website, a1trading.com. Thanks for watching.